we used to be able to, at least in US and Canada, we used to be able to have one person working, and the other person stay at home and raise the family. But because of this, now you had to have two people working, and a lot of times two people working each two jobs and trying to do everything, and they're just scraping by. And what is that? What happens to their kids in that environment? What does that look like? What is the society decay in that? In Bitcoin, you'll be back to one person working, and then because prices that should fall naturally and actually get faster and faster deflation, then that person will be working 20 hours a week, and then 5 hours a week. And then, and they'll get richer the entire time because the natural state of the free market is in service to them.
Forget everything you've been told about the economy, because the truth is far darker than you realize. There was a time when one paycheck could buy a house, raise a family, and secure a future. But that era is gone. Now, even with two adults grinding through multiple jobs, families are barely surviving. The system isn't just broken, it's designed to keep you trapped. Stress is crushing households, children are growing up in chaos, and society is unraveling at the seams. Jeff Booth delivers the wake-up call we've been waiting for. He reveals the brutal truth. Our economy is a rigged game, propped up by endless inflation and debt. But Bitcoin changes everything. Imagine a world where prices fall instead of rise, where a single income could once again support a family. And then, as technology accelerates, that same worker only needs 20 hours a week, then 10, then 5. Instead of running faster just to stay in place, you'd get richer by default because Bitcoin unlocks the natural state of a free market, an economy that serves you, not the other way around. The old system is dying. The question is, will you see the shift coming or be left behind when the collapse hits? Let's watch clips from Jeff Booth's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
How do you come to like Bitcoin as a useful asset, as actual money and a solution to like a free market moving towards deflation?
So let me just start with a couple of things, because this is so confusing. You have to almost go back and forth and say, and keep asking yourself, what would the world look like from measuring this one system? What would the world look like from the other system? And you have to stay there, right? And you have, because it's so hard to understand. And so instead of saying Bitcoin, say, and protocols don't come around very often. The internet was a protocol. The TCP/IP was the base layer of the protocol that was developed by DARPA in the 60s. It took 20 years till layer 4 HTTP came out, and another 20 years till your iPhone was on top of that, using the same protocol stack. And what does that say? What it says is protocols develop very slowly with intention, and they're winner take all. There is no second internet. Right? There's no, you can be North Korea and say, my citizens can't be on the internet. You can't choose to not participate without participate. If you choose to not participate, you're not in it. Right? But it would also say because they don't come around very often, we would compare with them with the technologies that come around more often. So we would think we could do a better Bitcoin, right? It would be natural to think that, and a free market would naturally do that, as you created 20,000 other coins, because people on Bitcoin had the appearance of making all this money, right? So I'm going to make my next one. But what is actually happening is Bitcoin is the base layer of the protocol, and it's and that protocol is what created Bitcoin. Is the first time in human history we had something that was decentralized and secure, open, decentralized, and secure. And we should take every one of those words. Open. Anybody could use it. They didn't require a government to say yes to front. You could front run your government. You could front run institutions. Anybody in the world could use it. It was wide open. Decentralized. Nobody could control it. Right. It would get so it was. You could have the most Bitcoin. Didn't matter. Nobody could control it. It was completely decentralized and secure. It couldn't be hacked. That would mean, for the first time in history as well, that we never seen that. We always trusted institutions to protect us, and then those institutions end up hurting us. But so this was something very new and would be misunderstood. So from that position, and then because of the way of proof of work, It's bounded by energy. So you have a physics-backed system bounded by energy, right? And energy is a first principle of life that's decentralized and secure. And what's happening if you measure in Bitcoin is it resolves the paradox that I described before. We live in an inflationary system, but if the free market is deflation. And resolving that paradox is if you measure in Bitcoin, all of your prices will fall forever. And if you measure other currencies in Bitcoin, you can see the relative debasement of every currency, right? You can see it against Bitcoin. The relative debasement of the US dollar against Bitcoin is less than Argentina and less than Venezuela. And you can see the relative debasement perfectly. If you measure this house I'm sitting in right now in Bitcoin, 4 years ago, this house was 100 Bitcoin. This house today is 15 Bitcoin. Even though in other system, the measurement from the other system, this house has gone up from $1.4 million to $2.1 million in the same piece. So what is that saying? All prices on the energy-backed decentralized secure protocol are falling. It's the free market imposing this. And it doesn't care what I just said. It doesn't care about you, me, and it doesn't care. It's imposing this. Now, all of the people that are buying houses, what are they doing, and why are our systems degrading? Because what they're saying is, I can't store my money in cash. I have to store it in a house, right? As bankers understand that, and more money understands it, or people in China understand that, another thing, they have to move their money into a hard asset. And a house moves, instead of having its utility value, where we grew up in a family in a neighborhood 50 years ago that was a neighborhood, it moves into a store of value, and it becomes an instrument that is not a utility. And so, but why this is so hard to understand is because most people, 99.9% of the planet, is measuring from the system that's debasing. But if you just simplify that, if you say, if Bitcoin stayed decentralized and secure, it is repricing the world. And people ask when? Right now, every day. Right? It's a light switch, because what's going to happen here is a whole bunch of people are thinking they are getting returns at a 10% IRR or 8.5% IRR or 5% IRR in a bond. And Bitcoin has returns of 50% IRR for the last 16 years. And it'll have 15% for the next 16 years. And so all of these trades are losing value against the repricing of moving to the free market.
Bitcoin is more than an asset. It's the revolution of monetary truth, a decentralized force powered by energy. While fiat currencies disintegrate, Bitcoin unveils an undeniable reality. In a truly free market, prices should naturally fall. Your house, once 100 BTC, now only 15, yet its value surges as the dollar crumbles. This is no mere speculation. It's the market correcting itself. With 50% annual returns, Bitcoin isn't a gamble. It's the escape from a rigged system. Adaptation is inevitable. The question isn't if you'll adapt, but when. The world's crushing debt is mathematically impossible to repay. Your assets are an illusion propped up by a broken system. But Bitcoin changes everything. It's the ultimate debt destroyer. Just ask El Salvador, whose bonds soared after adopting BTC, while the US gets downgraded. This isn't speculation, it's financial physics. As productivity soars and prices should fall, Bitcoin becomes the honest measuring stick the world desperately needs. The great repricing has begun. Which side will you be on? Let's watch more clips from the interview.
I get asked the same question all the time, Andrew, which is the credit underlying the existing balance sheet of the world, when I wrote my book, was 185 trillion. 250, and 185 trillion of that credit came in the preceding 20 years. So as the faster, remember this, productivity growth is deflation, right? So the faster productivity growth, forget GDP, faster productivity growth is deflation, faster deflation. So when people talk about productivity growth and increasing prices, it's like, how could you say those two things in the same thing, right? Because the productivity growth is leading to faster credit growth, and it's exponential because productivity growth is exponential. So the other side of the ledger has to capture that productivity growth at a faster rate. So the 185 trillion that came within the preceding 20 years, you knew it was going to happen. It was going to accelerate because the productivity growth of AI and compute and everything else was exploding around the world, and it had to capture it to keep that system in check. So it had to concentrate it. Government had to get bigger. Individual rights and freedoms from the centralized control system had to go away because it was a centralized control system. And I predicted in that book what it would be 5 years later. And because you knew it was exponential on both systems. And today we have $400 trillion of debt underlying that balance sheet. Now, the $400 trillion of debt, if you paid back, that's in another 5 years, we've added that much more, right? That's not the unfunded liabilities. And let's just say it for what it is. The debt is insolvent, right? If you tried to pay back the debt at $1 a second, it would take 12,873,000 years to pay back. It's already insolvent. The people that believe it's solvent are letting their wages get stolen in it at an ever-increasing rate, when all they need to do is move their time and energy to Bitcoin. But a lot of people will stay stuck in this. If the debt is insolvent and the total asset value of every single thing in that is 900 trillion global wealth, you could say that's our perceived wealth of the world, right? If you own a home and even if you have a mortgage against it and you have that gap, you think you have that money, right? But if the debt is insolvent, and nobody will allow the debt to go insolvent, but if the debt is insolvent, then the 900 trillion isn't worth 900 trillion. Your house is worth almost nothing, right? If it all failed, it would be a complete collapse. Every bank would collapse, everything would collapse. So what do? We pretend it's solvent and we add more to it at an ever increasing rate. Yeah, well, look at El Salvador as an example, right? Their bonds have been upgraded, I think 2 or 3 times since they put one Bitcoin a day on their balance sheet. That was all. It's really simple. At the same time, U.S. bonds have been downgraded twice at the same time. So what's happening is Bitcoin is healing the debt. It's removing the debt in El Salvador. They think they're going to be debt free in 2029. Their bonds are now trading at par, right? They were 23 cents on the dollar 4 years ago. It was going to go insolvent, IMF again, and they said no to the IMF. And they said, we're putting Bitcoin on the balance sheet because it's a control system. It's not so the debt is being repriced. It's going away, right? It's the same thing if you own Bitcoin, right? If you owned Bitcoin at 10,000, right? And now it's 96,000, 98,000, whatever it is. And you had a bunch of debt, you could retire the debt. It's the same for any single person, any single government, we believe these governments because the governments have gotten so big by extracting more and more. Governments they're supposed to serve us. Now they prey on us by extracting more, right? And we believe that system is normal because it seems normal to the system we're measuring from. It's not normal. It's not normal at all. And so you don't have to wait for your government. You don't care. We have a very narrow mindset because we see Bitcoin as a protocol, and that means it's developing in layers, and that means you don't need another token or anything else to be able to integrate with it, and it's all interoperable, and so it's moving faster and faster and faster, and it doesn't take a developer to build this other kludgy coin with a bridge or anything else to be able to use it. It just is, and so that means the cost is so much less for the developers that are building onto driving an API into the protocol. All the wallets interconnect, and it's moving faster and faster. Well, there's a whole bunch of belief because tokens are still, they can have a token and then make a bunch of money on the token and sell the token and everything else. Well, there's a lot of belief that that's a real return. I don't think all of those are going to zero. So because it's native into the protocol. So how do you have to think about that? You have to think about whether companies that can deliver enduring value into something that is going to free, right? A lot of this stuff is going to free or close to free. And so you have to construct companies differently. You have to construct the teams you're working with have to be different. It's so different than the venture world that exists today, right? That I took money from, I was part of, I understand, and then to move your head over to what this looks like.
As Bitcoin nears its first potential death cross since 2022, the $80,000 support test represents more than a technical pattern. It's a stress test for the global financial system. The crypto's current volatility reveals the unsustainable tension between inflationary fiat regimes and deflationary technological progress. Short-term holders panic selling while long-term investors hold steady mirrors the broader economic paradox. Our $400 trillion debt bubble requires perpetual inflation, while productivity gains naturally drive prices down. This system, as Jeff Booth warns, must increasingly cannibalize itself to survive, explaining why governments grow more authoritarian as currencies weaken. Yet Bitcoin's protocol offers an escape. El Salvador's bond market recovery after BTC adoption proves the model works, their debt upgraded while dollar-denominated bonds falter. The death cross may spark fear, but the underlying reality remains. Fiat systems are mathematically doomed, while Bitcoin's energy-backed design solves the trilemma of secure, decentralized money. Technical analysts watch the $76,741 support level, but the bigger picture shows Bitcoin repricing global assets against honest money. Whether this dip becomes a crash or buying opportunity depends on recognizing Bitcoin's true role, not as a speculative asset, but as the base layer for a new financial system. The coming weeks may show price weakness, but the decade-long trend remains clear. As with all technological revolutions, the old system fights hardest just before collapse, making this potential death cross not an end, but a new beginning for those who understand the monetary shift underway. As we wrap up, would you rather hold cash, real estate, or Bitcoin in the next 5 years? Why? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.